Hello, my name is Pat Ryan. I'm the chairman and CEO of Ucore Rare Metals. Ucore Rare Metals is involved with rare earth refining and processing. We're bringing the mid-market of the rare earth stream, the supply chain, and making sure that those building blocks of technology, as we call them, light and rare earth oxides that connect the mine upstream and the magnet makers, the metal alloy makers downstream, are in good form. So we work on that refining and processing that's currently 95% controlled by China. We're looking to bring it back to the Western world.
Good to meet you. First time we've met or spoken, Pat. And so, why don't you introduce yourself to the audience? Where have you been before? What have you done? And what's the relevant experience compared to what you're trying to do now?
Yeah, certainly. I'm a mechanical engineer, and when I was 30 years old, and I'm not 30 anymore, I actually started a tier one automotive company here in North America, and tier one supplier, I should say, and very very complex. It's you're serving customers like VW, Mercedes, and Ford, and GM, and the Japanese three, Nissan, Honda, Toyota, and developed the company into quite a sizable state where many processes were used to, I guess, through almost machine learning these days, make sure you're very economically sound in your processing. Your materials are very good, and you're focused on customers. You're focused on delivering lean manufacturing and actually 21st century digital manufacturing techniques. I became a director of Ucore back about 7 or 8 years ago, and as a director, Ucore had a mine at that time. It was a resource, I should say, not a mine, but a resource. And as that mine or resource was developing, I also had my foot in the automotive industry, which I could see the electrification of vehicles coming along, and I understood that the metallic chains that would supply the batteries and the motors, in fact, which are driven by rare earth permanent magnets, that they were missing. And as a director of Ucore, somewhere around 2018, 2019, decided that, you know what, if we continue to bring our Alaskan resource on board and turn it into a usable concentrate, it's going to go back to China for processing. It'll never leave China. So the eureka moment was, hey, why don't we take some of our 21st century digital manufacturing techniques? Why don't we take Western innovation? And why don't we look at the 40-year advantage that China has in rare earth processing, and why don't we make it better in North America, at least from a flexible side, meaning be able to turn the machine on, turn the machine off, deal with multiple feedstocks, create products for multiple customers. And in fact, that's how I became involved with Ucore, and we decided that we were going to then take our technology, which was coming along very nicely, and build commercial construction. And I seemed like the, I guess, the ideal individual to build a team. I had done that with three tier one supply production plants in North America already, and here we are.
Okay, so I mean, you mentioned something there. Obviously, the kind of 40-year head start that China has compared to the West, and certainly in the US too. The people with the necessary skill sets actually deal with rare earths and in a competitive manner. I mean, can you kind of break that down? Who is in and around you that allows you to be able to deliver against that problem?
Yeah, there's no question. I mean, you can have all the capital in the world, but if you don't have the people, you're not going to deliver the product at the end of the day. So I'm not going to get into using names. I'm sensitive about indicating who's on our team specifically because of the article that came out about several weeks ago, where the Wall Street Journal reported that anyone that was involved inside China with processing of heavy rare earth solvent extraction, which is the main process that's legacy that they use there, passports were being confiscated. People were told they could not leave the country. Anyone that might have worked in China was being scrutinized. And so our team actually, on the feedstock sourcing side, we've got someone that actually worked with Linus Corporation in the early days. And he heads up our feedstock sourcing around the world. Our technology is a PhD out of Australia who is very skilled with solvent extraction. And our technology is known as Rapid SX, which is a derivative of solvent extraction. We apply the chemistry that much more effectively. So you have to have an understanding of solvent extraction. This PhD out of Australia came to our Kingston Chem demonstration plant, saw what we were doing over a 2-3 week period, looked at all the data we were collecting that showed the advantages that we were achieving with our tech, and he joined the team as well. So he's the head of technology. We've got someone that actually built was a project leader for a heavy and light rare earth processing, solvent extraction processing plant that built a 5,000 ton per annum plant. That person has joined our team in the last month, and they're now responsible for the project, which is being deployed, our commercial deployment in Louisiana in the US. So a very key individual there. an operations manager who has worked in the rare earth industry for 17 years and has worked inside running processing plants in the rare earth space, is now the operational manager for Louisiana. So we've done a good job of getting feedstock, technology, project management, operations all pulled together, because they become, and I mentioned my automotive background, APQ, for advanced product quality planning, which means you've got to have a good source of information from different people that bring something to the table, and these individuals are key to making sure we achieve commercial success when we head to Louisiana here in 2026.
Okay, so there's a big team, and you talk well of them. What's the plan though? In whether you want to call it a business plan or the plan of attack commercially, how what are you trying to build and what are you trying to be?
In 2019, we purchased a company called Innovation Metals Corp, and they had the technology Rapid SX. And we took that technology, we invested close to $15 million in getting that technology ready for prime time commercialization. We built a very robust commercial demonstration plant in Kingston, Ontario, Canada. And I think the reason we chose Kingston is Kingston's very adept with, or a lot of experienced metallurgy people there. And we built a very robust commercial demonstration plant. It's about the size of two tennis courts. So it's not a desktop, laptop, gee, come see my pilot plant with duct tape and a rubber pen to be smart about it. It's a very robust commercial demonstration plant. It's got run with PLCs and sensors and controllers, and one person can actually run the plant. Because my experience is that the more you can integrate cobots and artificial intelligence and machine learning and dashboard metric type approach to your processing, where you're getting very specific about how you're moving, in this case, chemical concentrates through the plant and taking out the purified oxides. That is a unique approach. So if you're going to be commercially successful, you've got to have a very good commercial demonstration plant. So we've done that. And in about 3 years ago, the U.S. Department of Defense had a bid that came out and said, we're looking for the most advantageous technology that can take on the legacy solvent extraction. And they put a bid out, and we, Ucore Rare Metals, won that bid. So we're a Canadian company, but we won the bid from the U.S. government to say, here's $4 million US. Go ahead and run many hours on your plant and gather up data that show why your technology compared to solvent extraction is that much better from a footprint standpoint, from an OPEX standpoint, from an ESG template, all the things you'd look at for a processing plant as you compare it to what China's doing. So we've run close to 6,000 hours on the plant now, and now we're getting ready for commercial prime time. As that program with DoD started to get to its wind down phase, the DoD stepped in and said, you know what, you're ready for commercial deployment. In the last 2 years, we had identified that the Gulf Coast of the U.S. was going to be our first commercial demonstration or commercial refinery for rare earth oxides. We landed in Louisiana, central Louisiana, away from the coast where the weather can be a little bad at times. And the U.S. government, DoD, probably our second most valuable asset apart from our technology is in fact our relationship with the U.S. DoD. They invested $18.4 million US as a grant to say, go ahead now and let's get your stages of production amped up and ready for commercial deployment. Our production plant in Louisiana will be deployed in 3 stages. Stage 1 is a 2,000 to 2,500 rare earth oxide output. Stage 2 is 5,000, and stage 3 is 10,000 of rare earth oxide. So we're funded now for the stage 1 throughput. So our engineering team's been working on fine-tuning process flow sheets, ordering equipment, long lead time equipment required for Louisiana for commercial deployment in mid-26. All the things that you go into building a production plant, in this case, rare earth refining. And again, I can't understate the fact that we've built such a robust commercial demonstration plant. Really vets out a lot of the issues that can come up as you get to full-scale deployment. There have been many stories of people that have just jumped in and said, here we go, let's spend $300 million and turn a plant on and see if it works. And it ends up costing much more money and much more time. And so therefore, with our tech, which is scalable and modular, we can actually start and scale effectively. So I always go back to our team and say, are the markets and the customers sound? Yes. Is the technology scalable? Yes. Are the economics there? Yes. You tick those boxes, you de-risk, put a team together, and you move forward. So that's where we are. We're we're moving to 26 with production.
Okay, so we've leapt to the DoD bit of the conversation, so let's kind of go there. Can I be clear about what exactly you're going to be producing in terms of, okay, rare earth oxides, but are we lights? Are we heavies? What are people? What does the DoD want, and what do you see yourself doing?
Yeah, so the DoD actually wants the heavies. They've made several recent investments. One in particular with MP Materials, and then the MP Materials are NdPr, so it's a light rare earth. But they've been looking at Ucore for processing heavy rare earth for a couple of years now as we run our plant. We've actually produced heavy rare earth oxides, dysprosium and terbium, in our Kingston plant, and that's what will be one of our main products coming out of Louisiana. But because of the sort of bespoke nature of our technology, it's a column-based technology. When you get into solvent extraction, they have huge mixer settlers that go on for football fields, literally, and thousands of stages to use the chemistry to split out and make the chemical splits to get you to your final products. With Rapidex, you're using a column-based technology. It's 1/3 of the space. It's a closed system. It's not open to the environment the way a solvent extraction plant is. A solvent extraction plant, when you walk in, you can smell the fumes, and whether it's nitric acid or hydrochloric acid, it's in the air. You walk into the Ucore commercial demonstration plant in Kingston, it smells like an office building. It's closed. And because of that, the columns and the nature of our computerized column tech, we can move in a scalable, bespoke nature. And so product-wise, apart from the heavies, there will be some lights, because when you make your splits, you get lights with heavies. So there will be NdPr as well. But the products that are needed for some of the ones that have been banned by China, they banned samarium, gadolinium, dysprosium, terbium, a couple others that are very strategic in the way they've banned them, or made them very difficult from an export license standpoint right now. They didn't ban NdPr because people can make NdPr. So we'll be making samarium, we'll be making gadolinium, dysprosium, terbium, and a couple of outliers that are used for very unique applications, whether they're in aerospace, water treatment, and certainly your electric motors for electric vehicles, or permanent magnets for wind energy and emerging industries, and all the stuff that your viewers know quite well.
You've got government grants that everyone's kind of bought into and said, right, that's great. Getting DoD on board, fantastic. MP Materials, big beneficiary of that, share price wise, that's for sure. Recently, along with Apple, kind of jumping in there as well. As you kind of go through the Rapid technology development, what are the sort of technical hurdles that you've got in terms of the different types of whether it be terbium or other things that you're looking to produce, where you can say, do you know what, this is commercially ready? Because prices have traditionally been very, very erratic in this space, and trying to work out what you're going to be able to sell it for is one part of the equation. If you kind of got a government grant, and therefore I guess people's expectation is that government off-taker, does that remove that risk, that variability, or would you also look to be truly commercially ready to the rest of the market?
Everyone's known for years that the Chinese government controls the various nodes of the supply chain, and your viewers would know the supply chains are: you've got your mining, then you've got your refining and processing, and onto your metal alloy making, your magnet making, and any day of the week they can move the pricing around to control to their benefit. And that's really been the challenge in the West, is that every portion of that supply chain has to stand up and be economic unto itself. And if it can't be economic at any portion through the supply chain won't work. So there's been ongoing talks, certainly with our off-takers, and DoD is one of them, of course, but talk of a Western supply chain price. And a Western supply chain price is needed to ensure that people that invest know that there's an outcome that's got economics that work, that there's an assuredness that you're not going to fall to a puppeteered, very low price, for China to take their $250 per kilogram dysprosium and say this week it's $100, and just turning the dial down to ruin anyone that's trying to develop dysprosium out of the Chinese market. That would be an issue. So certainly having a floor pricing model will protect some of that. Having a bit of a high point now, and with the MP deal that you mentioned, they picked $110 per kilogram as the NdPr price. That's quite a backstop, and it's twice the spot price in China, but it's a workable model. And I think that's with my automotive background, I can certainly tell you that the business that we've acquired in the automotive world over the years has not always been the lowest price. It's been a steady, stable price with reliable supply, with good quality, on spec all the time, delivery when you need to deliver. And that's often more important. That assuredness is often more important than just give me the low China price today. And so I think people in the Western world are realizing, look at Ford Motor Company. Recently, they had to shut down their Chicago plant because they didn't have rare earth permanent magnets. And, the need to have that rare earth permanent magnet so they can keep their supply chain running at a defined price is much more advantageous than being puppeteered by China, as I mentioned. So, yes, floor pricing models ensure economics. DoD is going to set further floor pricing, which will help the Western world guide its way forward, and it's needed. That there's been too much manipulation, so let's get off of that and let's get back to robust economics that still allow you to be a good processor. There's some catch up to go on here, but catch up with your processing, but have at least a pricing model that gives you a fighting chance as you do.
Okay, well, fair comment. Let's also get back to Rapid SX in terms of the kind of throughput and purity levels that you're targeting per column, going from demo through to commercial. What are you aiming for?
Well, yeah, commercial purities like dysprosium, 99.9%. Yeah, we're producing at purities that are needed for your permanent magnet manufacturers, or even consumer electronics where they don't need permanent magnets. They just need a purified oxide to a certain percentage. So yeah, we're targeting commercial levels.
Where are you today in terms of those levels?
We're there. We've produced
You're there.
we produce product out of our Kingston plant using Rapid SX and confidentially supplied to customers that are under evaluation right now with the product.
Okay, and in terms of the kind of the column design scale, therefore, are there kind of diminishing returns on size, or is that kind of modularity you talked about earlier kind of core to your engineering thesis?
Yeah, I think no matter what you do in the Western world, you've got to have low cost manufacturing, right? So again, if you're building a 5,000 ton per annum solvent extraction plant, it's a behemoth of a plant that typically takes on one resource, and you move from there. I've encouraged our team that based on the background I've had, that you've got to have lean manufacturing disciplines throughout your approach to the processing. That means don't move things around, don't touch things twice. Make sure you use machine learning and automation wherever you can. Take the people, touch time, labor out of it. Be very dialed in on your metrics, whether it's electric that goes into pumps that are pumping the system along, and in a scalable, modular way. Just again, no waste. Just don't have any waste. Don't get frivolous in your approach to what you're doing, and in doing so, you'll develop again what we call work cell manufacturing mentality. And you need work cell manufacturing mentality, meaning rather than turning on a 5,000 ton per annum solvent extraction plant and saying let's hope the market shows up, if you can do it in smaller increments and turn on and run for 3 weeks, 4 weeks, and produce dysprosium, and then turn your system on, perhaps bring a different feedstock in and run for 3 or 4 weeks on a parallel line and produce samarium. Those are smart approaches to addressing what the market needs right now in the Western world. And it will grow over time, but that's where the scalable modular nature comes in. So you can then plug and play, and we call them Rapid SX machines. So a machine has 64 stages, and in a stage one that I mentioned for Louisiana, you've got 5 machines, and those 5 machines form a train. And then you can build beside it and have a bespoke boutique approach. And again, it's everything we've tested in our Kingston plant at this point that delivers the metrics that you need in that regard for addressing the market.
Okay. So what's the kind of mean time between failure or maintenance intervals on these machines?
Yeah, so you've got that's a good point. You've got to design for maintenance, so you've got to make sure that we've got a series of pumps and PLCs and valves and different things that are essentially off the shelf. So you're not talking about long lead time solvent extraction, custom made components that can take a year or more to bring on board. We can actually, in a scalable modular way, move pretty quick. They're tried and tested materials that are used in wastewater chemical plants. In fact, one of the reasons we chose Louisiana was because it's a very big chemical industry. And so moving chemicals with the pumps and the valves and the pipes and the things that we've done are identical to what's being done today in sort of Louisiana and other areas. But the chemical trade in Louisiana is one of the markers for success that we looked at. And one other important point, I don't want to interfere with your question here, but it happens to be that in central Louisiana, um, back in World War II, there were a handful of what they called foreign trade zones. And the Air Force, ex-Air Force Park where we are, the England Air Park in central Louisiana, happens to be a foreign trade zone, which means that your feedstock components, which at this point, there's one rare earth mine that opened in North America in the past 6 years. That's the Mountain Pass mine, but it means your input's going to have to come from outside of the U.S. And so bringing inputs in from Brazil, perhaps Australia and the Far East, not China, but from the Far East, into the U.S. for processing, and perhaps turning around, sending it back to European metal magnet makers or Japanese metal magnet makers, there's no tariff consequence. And so in our days of tariff and trade wars and standoffs and whatnot, I joke with our team, you can't put a tariff on the Earth's crust. And the fact that we're in a foreign trade zone right in the center of central Louisiana, something that was developed in World War II, turns out to be quite advantageous for us. So again, not to deflect from your question, but I just thought I'd mention that.
No, how long can that last? I mean, so obviously you didn't put that in place, but it's a legacy which what you're saying won't change.
Yeah, it's been there, and again, it was put in place in the post World War II era to excite commerce, and the whole idea was to be able to manufacture in the U.S. as if you were manufacturing outside of the U.S. And there are a handful of them that still exist in the U.S. and we happen to be on an ex-Air Force base that is one. And how
Okay.
long will it last? It's legacy.
Excellent. Okay. Well, and what obviously that will, could dramatically help your capex, opex per ton number as a result. I'm not quite sure how they compare to Chinese benchmarks, and maybe if China is not exporting anymore, it's irrelevant. But how soon do you kind of get into a phase where you understand what the cost inputs are versus the margins, if we can establish a kind of floor price for these various rare earths in the US or the West? What sort of studies are coming down the line?
Yeah, so on the Capex side, our stage one of production, which is to get to 2,500 ton per annum of rare earth oxide, with infrastructure to support it, is a $65 million US price tag. So it's not a big number. You get to 5,000, you're adding another 20 million on top of that, so you're at 85 million to produce a 5,000 ton per annum total rare earth oxide plant, compared to 300 million for a solvent extraction plant. So it's quite attractive, but because of its column-based nature, it's off-the-shelf column-based proprietary media. So it's very unique in its approach. It's taking the chemistry of solvent extraction and saying in a very smart Western way, how do we apply that chemistry that much more effectively to ensure that our throughput, our operating parameters are that much better, so we've got a real fighting chance against the Chinese market.
And so what's going to determine the lines that you put in, and therefore revenue lines, in terms of what you focus on in terms of the total rare earth oxides?
Well, certainly the heavy rare earth side is we're focused on that, because as you would know, there's 99.9% of heavy rare earth is processed and refined in China. Most of their input comes from Myanmar, which is a rebel-torn area of the world, and it's got its own geopolitical tension that goes along with that. Excuse me. But anyway, the dysprosium and terbium is certainly the direction for our product on the heavy side. And again, samarium used in samarium cobalt magnets that might be priced at $2.50, and you can only get it in China. But it'll be much more expensive than that to make it available to the U.S. DoD for samarium cobalt magnets that go in F-35 fighter jets and all sorts of other applications that the military uses with samarium. So
right, and then with regards to the technology itself, is it proprietary at column level, or is it a control system level, or what's the IP around this?
It's patent pending at this point, and the technology is. It's proprietary, certainly from its approach to how we use a unique media to be able to move stuff through. And there's a lot of trade secrets that goes with it. I dare say that our trade secrecy today is probably more valuable than our IP. And the IP is still very valuable, but the trade secrecy is probably more valuable. And with my background in the automotive industry, I can tell you that when you get to a process patent, you've got to be super careful, because if you actually publish exactly how you're doing everything right to the nth degree, well, good luck, because you just published how you do everything to the nth degree, and so we'll step in and perhaps want to copy some of your ideas. So a combination of robust IP with its column-based approach and trade secrecy form the complete intellectual property for what we're doing going forward.
And how do you see the size of the market? Because clearly there's obviously some first mover advantage initially for you, in one in terms of grants and etc. But MP materials recently with with their DoD contract and equity at equity level, right? And offtake. We're seeing other beneficiaries around the marketplace. Linus obviously, did quite well off the back of that news. People like Energy Fuels the same, you the same. How many is it? How is there room for everyone as it stands, or do you think we're going to see lots more new entrants coming into the space? What are the barriers to them if they do?
I think one of the barriers that people may not appreciate is time. It takes time to really. In our case, we're in the refining and processing game, and we started with our acquisition back in 2019, and here it is 2025. So 6 years later, now we're ready for commercial deployment. So it takes time to understand all the critical operating parameters, how to have best-in-kind processing to get to where you need to be. So I'm sure there'll be new entrants that come into the space, but capital, again, doesn't solve the problem. You've got to have good people that understand what you're up to. You've got to have robust technology that's very scalable. And you've got to have the economics that work at the end of the day. But yeah, your barriers, in fact, are time and good people. I think money, as the floor pricing gets set, and the investors realize the attractiveness of the returns. That's all good. But at the end of the day, you've got to be able to execute. In order to execute, you've got to have, again, robust technology, good people, smart business, and I've had a career doing that. And step one was to surround the company with people that really know what they're doing in the solvent extraction space, and let's make it that much better. When you go back in time, I mean, the West has always been in a difficult spot, where they've had to pull up their socks, so to speak, and make things better. And innovation's always won at the end of the day. So here we are again. Let's innovate our way forward and come back to the top of the heap. So
so technology wise, you sort of explained at a high level where you're at in terms of the validation. And in terms of feedstock, you've got someone who's, say, US focused. There's a lot of kind of, I guess, US friendly feedstock sources which you've engaged with. What stage are they at, and what type of feedstock is it? Because I'm trying to work out. I'd love to understand with your technology whether kind of Rapid X can be tuned or refined to each one of those feedstocks in your scope, and how long does that take?
Yeah, so from a which projects and which mines, and there aren't many mines, of course, but are available. That's one of our, I mentioned at the outset, one of our experienced people who was part of the original Linus team. His job is to not only just study mineralization and capital plans and people that are involved with projects and whether they've got a fighting chance to bring them on board, but to actually go to the site. So our team has been to Brazil, we've been to the Far East, areas like Vietnam, we've been through Australia, we've been through Eastern Africa, taking a look specifically at projects to understand where they are in their development, where they've got the right people, the right capital, the right mineralogy to move forward and make it valuable for stage one in Louisiana. And we've processed in Kingston, we've processed monazite, we've processed bastnazites, ionic clays, pretty much everything. It's again feedstock agnostic. You create a pregnant leach solution that anything that can feed into a solvent extraction plant can feed into a Rapid SX plant. And so you've got the ability to take multiple feedstocks. We've even blended feedstocks. And we blended feedstocks and then set our control parameters to be able to produce most effectively with blended feedstocks. But for the most part, it's, ionic clays are very good. Bastnazites are good. We've processed everything in Kingston to show that our metrics and our robustness are there. Certain things process better than others. Ionic clays process very well, for example. And they've got heavies in their content. So, Yeah, it's been tested very thoroughly.
I mean, I'm not asking for your favorite child or anything, but have you got a preference for the types of feedstock that you want to go for? And I guess it's going to come down to the economics of it and your ability to remove any deleterious like
Yeah,
elements
the
to it,
Brazilian
etc.
resources are very good.
Right. Okay.
And we've, there are a number of resources in Brazil, and we were there just several months ago. We're traveling back there again in the next month, and the team's going to be taking a closer look at several projects that we're involved with from an MOU standpoint. But we're moving at least one to a definitive agreement on feedstock. But yeah, the Brazilian deposits are very good. There's probably 25 or 30 actual up and coming resources in Brazil that a lot of people don't even realize are there. But from our vantage point, we're looking at about four that are very promising, and one in particular that we're moving towards a definitive agreement with to be able to launch within Louisiana.
And what are you looking for in terms of, you're managing risk on all of these things. You don't own the asset. You're talking about MOU with an entity, but looking at the asset itself, are you looking for, polymetallic sources? Are you looking in terms of purity? I mean, how do you grade it, the risk?
Well, certainly mineralization, and then it's the capital plan, whether they can actually bring it on board economically, and whether they've got the right team to deliver economically ongoing. And one of the unique things we've done with our feedstock sourcing, it's not just a buy-sell arrangement, and we're not a tolling operation. What we're doing in Louisiana is our plant number one, by the way. We plan on building subsequent plants and joint venturing with our technology as well. We'll be ready for licensing at some point in the next several years. We want to self-use with the tech first. But yeah, certainly the mineralization itself, we're looking at the mix of the heavies and the lights. We're looking at the impurities that might be there, iron, aluminum, whether that's being dealt with effectively. We're looking at radioactive norms to figure out what that might be involved with the process. Um, and from a processing standpoint, we're then speaking with the resource, which is coming on board as a mine, and saying, I tell you what, when we get upside from our customer at the end of the day, whether it's a metal alloy maker, a magnet maker, or just an electronics company or Department of Defense, we'll have a shared opportunity with you downstream. And so our economics that we have through processing, we'll share with you and your economics, and create a combined force so that it's not perhaps putting the mine at risk at some point where they can't make it happen. If you've got upside, make sure you're sharing some of that upside to ensure that everyone is balanced throughout the economic stream. And so we're taking that approach to our economic model as well.
Sorry, I want to be clear. So you don't want to like a tolling agreement with anyone, and you don't necessarily want to. You're saying you don't necessarily want to buy it. You want to share the economics once it's processed. That's
We
what
will buy it, but we will have an
you will
upside
buy.
clause,
Okay,
meaning we'll buy it and have an upside clause. So if we buy it and we process it and customers buy it at, X plus 10%, then perhaps a 5% kickback goes back to the mining operation to ensure that they remain healthy in their relationship with us, and in their efforts to continue to process and bring product to us for refining.
okay. So I guess what can they? Because they like most development plays at the moment. Attracting capital, especially for something I think rare earths, which is okay. Critical minerals is top goal right now, certainly in the last month. But it's been quite a erratic market as well. So in terms of them, their ability to get funding, what do you do for them that they can use, and what was their kind of backstop for that?
Well, certainly, with Ucore, because we're backed by the DoD, and we've got two tranches of funding now: the 4 million that I mentioned, and then the 18.4 million on top of that. And there should be, because it's another transaction agreement, there'll be more funding coming our way. But for anyone that's in the mining space and the resource space, they need to have a sound partner. So they need to have someone that they know is going to process and be an ongoing customer for them. So the fact that we have backing from the DoD, the fact that we've got our funding sorted out for stage one of our production, that becomes very bankable, if you will, to the mining operation. They can then look at us and go, we've got a customer, we've got an off taker. They're going to take our product, they're going to process. They've got customers at the end of their trail, and therefore we can take that to the bank and go, we've got opportunity to sell our product, and we can sell it at a price defined as, with a range. and one of those customers is Ucore Rare Metals. So when we've had a couple of people step up of late, and it's not news, for example, that Meteoric publishes that part of their offtake is going to be with Ucore, and I'm sure that makes them much more bankable and feasible in their approach with investors.
That's kind of a lot of subject to stuff in there, isn't there? So when do you kind of nail down all of those moving parts? Because the DoD backing you so far, you've got to, I guess, you've got to be able to kind of say, well, they will back us going forward as well. So what do you need to do from your side to make that work for all parties concerned?
So we're in discussions with the DoD pretty much every week, and we're currently talking through the particulars of the NP deal and looking at what needs to complement that type of approach. Not an equity investment. I don't believe that an equity investment from the DoD in Ucore is something that we need to consider at this point. But certainly an offtake with a floor price for heavy rare earth would be very advantageous, for example. So those types of discussions are ongoing, and our shareholders will learn more as we move forward. And then back to the mining and the resource side itself, on at least two occasions where we're working out the term sheets, the definitive term sheets, and so those are being worked out, and they will become known within the next 90 days ish, what those definitive terms are with our feedstock sources.
Okay, and could you use the same logic that you outlined for them on Bocan in terms of your own project? Would that work for that?
The Bocan project is it's got a heavy rare earth tilt. It's on U.S. soil, so it's got certainly some benefit there. But really, our eureka moment was a mine can take 8 or 10 or 12 or 15 years to bring on board. Even if you're prepping it just takes time to bring it on board. But a processing refining plant can deal with multiple feedstocks that allow you to process and get into business within a year. And the permitting, in particular, because we're at the England Air Park, it's an ex-Air Force base, all the permitting is contained at that level with the England Air Park. And that allows you to move at measured paces and get into the market very effectively once you've got the right technology, the right customers, the right economics, as I mentioned. But yeah, all of it fits very well.
Okay, and so we should see from you various advancement on various offtake strategies and commercial partnerships in the near future. Is that what I'm hearing?
Yeah, very, very much. And a lot of the up and coming rare earth companies. I go back, 2 years ago at conferences in the Western world, and whether they were, REIA conferences in Barcelona or in DC with a rare earth conference. Everyone was talking about trying to get LOIs and MOUs, and they were one-off transactional approaches of, we have an MOU with company ABC, and really irrelevant, but you're trying to wave a flag and go, look at us over here, look at us over here. And those LOIs and MOUs are really, in a one-off transaction world, are not effective. What you need to have are 3 and 4 prong definitive agreements to partnerships that allow you to show the world, Western world, how you're going to deliver products. So Ucore has a definitive agreement with a mining operation in Brazil, let's say. It's got a definitive relationship with a metal alloy maker that's going to feed into a definitive relationship with a magnet maker. And those 4 prongs together create a sound delivery system. And you can take a number of different 4-prong partnerships, with Ucore being the vital processing point, and make sure those prongs come together to deliver effectively a product at the end of the day. And so that's what you'll hear about. You'll hear about those partnerships coming together with definitive terms to show definitive outcomes for definitive markets and customers. I joke with our group all the time when they talk about the market growth. Let me remind you something. Markets don't buy anything. Customers buy things. So get very, very focused on what the customer wants and reverse engineer your supply chain and your plant to deliver for the customer and what the customer wants.
Okay. So I look forward to seeing that coming down the line, because I say definitive, more interesting than MOUs and LOIs. Dime a dozen on that front, isn't it? So I forgot to ask. I get the heavy bit in terms of lights, NdPr, etc. Because I was thinking about potential customers, Japanese or Korean on the magnet side. Are you going to be doing any of that?
Absolutely, because when you get to the heavies, you've got to split and get through the lights. So if the customers are certainly sought after in the Western world. If you're going to provide heavy rare earth to customers that need heavy rare earth, there will be a portion of light rare earth that you'll have to take with it, because if not, we'll just be stockpiling light rare earth and not selling. But yeah, we'll absolutely have ND, we'll have PR and NdPr because different customers want different portions of that.
Okay. And in terms of the kind of competitive horizon right now, I referred to, first mover advantage earlier, assuming you can get the technology sorted and the money sorted and plant build and into commercial production. How do you sort of see the competitive landscape in North America specifically?
Well, you mentioned some of the players already, and they're not necessarily competitors. They're needed to grow with the market. As you look at the growth between now and even the end of the decade, which is now 4.5 years away, you've got a 200% growth on permanent magnets. As you look at 2035, and some of your other outlying industries, emerging industries like robotics, that'll probably be the largest user of rare earth permanent magnets. It won't be EV or renewable energy; it'll be robotics, and a lot of the artificial intelligence that supports that, and the computer stacks that go with it, and the production of semiconductors that won't happen without rare earth. There's a lot of material needed in the Western world in order to make this happen. And one of the unique things is that anyone that's currently obviously buying rare earth permanent magnets from China has a very precarious position, because you've got to keep one foot in China and one foot in the Western world. You want the Western world solution, but you've got to keep dealing with China in order to keep your supply chains moving. So until the Western world can prop up and show that they can actually produce the products needed all the time in the quantities all the time, it's going to be difficult for customers to completely diverge away from what they're currently doing with China. And China knows that. And so therefore, I don't look at it as competitors necessarily, but people that are needed with smart processing to deliver to a Western world that needs lots of material.
Okay. And I guess finally, in terms of timing of all of the above, what are the expectations of the DoD, which is obviously that's the big name in the space at the moment, because for them it's not a lot of money. For companies like yours, it is a lot of money. What do you need to deliver for them to continue? What's the timing of the next kind of decision making, and when do you actually get into kind of commercial production and start generating revenue?
Yeah, so the DoD decision with the 18.4 was based on everything that they saw out of our commercial demonstration plant, Kingston, all the metrics that we had been touting about our technology. And so the funding is used for engineering development, process flow sheet development, equipment purchases, and again, not expensive. And it goes into our stage one of production. And so by mid 26, we're looking to have that stage one of the Louisiana plant commissioned and start to deliver product to the Western world. And that may seem like a quick timeline, but we've been working on this for a number of years. Our technology, again, is off-the-shelf type items with pumps and PLCs, and probably the PLCs are the most long lead time item in the development of the plant. Along with our $18.4 million that we had from the DoD as a grant, we also went out and raised $15.5 million on what we call the life raise here in Canada. It's a listed issuer financing exemption raise, and it allows you to do it once a year. And on the back of the DoD news, we went out and raised $15.5 million Canadian. We dealt with Raymond James and Red Cloud here in North America to be able to make that happen. And really, we had presented to a number of their institutional investors in a non-investment way for probably 3 weeks. And then by the time we opened the raise and told our story, we opened and closed the raise in less than 24 hours. And we had planned on raising $10 million, and it filled up immediately. And then we decided to overrun. We ran it up to 15.5. Could have went much higher, but did not want to dilute further for our shareholders. So essentially in US dollars, we added another, $11 million to the mix to go with the 18.4, to go along with previous funding that we had. So now we're well cashed up for that stage one to move forward and get done what needs to get done. And that's what the DoD wants. They're like, okay, let's get this first stage up and running. As you move towards completion of your first stage, we're anticipating there'll be more financing to move to the next stage. And again, that's the intent. But stage one is get into business, start making product, make it economically, and show the world what you got.
Brilliant, and definitely the last one this time. It's because in the uranium space, I think what we saw for a period was the kind of fear that the Kazakhs and the Russians would kind of flood the market with product. In this instance, given what you referred to right at the beginning, the Chinese, clamping down on any individuals or any companies with rare earth experience from leaving the country, removal of passports, etc. Do you think that there's any threat that the market? Again, we've seen it within the nickel space with Indonesia and so forth. But is there any danger of there being a flooding of rare earth products back into the market, or is the West looking steely-eyed and resolute on creating its own critical minerals market?
Well, one of the interesting things about the trade war, and there's no settlement between China and the U.S. Nothing definitive at this point regarding what the tariff rules will be. But one of the encouraging things that we saw with the MP deal was that the U.S. government wasn't saying, "Let's work on this trade war with China. Let's see where the cards fall, and we'll negotiate some rare earths back into our world based on tough negotiation." And really, what the MP deal showed was that they're not waiting for the cards to see where they fall. They're not letting the geopolitics, which can flare up at any point in time, become a strong point for China to use. They're saying, let's invest now, and let's take care of these critical mineral supply chains onto ourselves. So that's certainly a first thing that's very unique, is that investing in critical minerals is key, and that's what's happening. So can China flood the market? Well, if they flood the market, they'll be flooding in at tariff-induced prices. If you look at some of the export bans, there's certain things they can't export from China anyway. They can certainly export the rare earth permanent magnets, but a lot of export restrictions and even some of the licensing. If you go into the detail of the licensing, where will it be used? Will it be used in defense? If it's being used in defense, then you can't have it. Will it be used in electric vehicles? Show us the exact spot in the electric vehicle. Show us the plant, the people, talk about industrial espionage in the wide open. That's what's happened. So there could be some flooding. There'll be a tariff attached with that flooding, so that's always a concern. But I think that the current administration is serious enough to say, we're going to develop our own processing of critical minerals. We're going to develop our own permanent magnet manufacturing, and we're going to take care of ourselves. As the geopolitical tensions continue to ebb and flow, so be it. Let's get started and let's do this. They've got a head start, and it needs to be fixed. So I think for investors, they need to realize that now it's really serious. People are really doing what needs to get done. There are emerging industries that rely upon it. If you're going to be a leader in emerging industries, from AI to semiconductors, robotics to renewable energy, you've got to have those critical inputs. As I said at the outset, when I was a board member for Ucore, and I could see these electrification plans for vehicles coming along, and I was just sort of, wait a minute, there are no metallic supply chains. How's that going to happen? And you can see that manifesting today. And therefore, yeah, let's get busy. Let's do the job. When you're investing in Ucore, you're actually investing in all those different industries. You're investing in the AI, robotics, etc. Because we're in that critical, as I said, the building blocks of technology. We have that seat of technology that everyone's looking for, and we're going to continue to plow forward.